Good afternoon, ladies and gentlemen. As managing partner of AACS, I'm delighted to welcome you to our 4-day productivity workshop. What would it take for a developing country running at close to a 2% annual GDP growth rate to break out and reach the double-digit growth required to become the market leader we all know it can be? That is exactly the type of question that AACS is designed to answer. Over nearly 20 years, I've been at the center of the conception, launch, and operation of industry-leading businesses, products, and teams in highly competitive environments from New York to Silicon Valley, Dubai, Kuwait, Bahrain, Saudi Arabia, and West Africa. At AACS, we see tremendous opportunity in the synergies that exist across these markets. That's why we work out of Lagos, Dubai, and Silicon Valley. We'll be discussing some of these themes and opportunities with you in the course of these next 4 days. And for those of you who will be attending our CEO Summit in Riyadh, we'll be going into more depth. At this time, it's my pleasure to welcome AACS's Chief Visionary, Ayo Abino, to share details around our purpose and illustrate the way we work.
Thank you, Rafiu. Good afternoon, ladies and gentlemen, and thank you for the opportunity to share the AACS purpose with you today. If you're part of this 4-day workshop, I absolutely guarantee you that we will show you practical examples of how to bring your unusual ideas to life. But you must have guts, be cerebral, be resilient, be bold, and be pragmatic. In a world of limitless opportunities, where the bulk of us have settled for the status quo of our comfort zones, we believe that people, governments, organizations, and businesses must live the AACS creed. At AACS, we give you the winning edge by inducing you to think out of the box and constructively create the capacities and the competencies to bring your thoughts to life. And then you lead. In over a quarter of a century, working in the finance and banking sector of the Nigerian economy, from the level of a trainee to the level of an executive director, I have seen businesses and people struggle through this creed. But the reality is, it's the only option we have if you're going to drive a 2% GDP to double digits that you need. I'll be speaking next week at the 2020 Commonwealth African Summit, themed Stronger Together. And this is the purpose I will be driving. And 4 examples come readily to mind. Pep Guardiola, Muhammadu Buhari, Tony Elumelu, and Godwin Emefiele. Come with me. In 2016, Manchester City hired Pep Guardiola, arguably one of the best coaches in the world. They wanted a strong team that would do things differently. Pep had a disruptive idea. He wanted to continually play 12 men against 11, so he could always have an advantage on the football field. Great idea, you will say. But how do you do this? Pep fired the Manchester City goalkeeper, Joe Hart. He fired the best goalkeeper in England, who was quite very good, but was not nimble with his feet. And he hired the Chilean, Claudio Bravo. Claudio Bravo may not be as good as Pep as a goalkeeper, but he was quite nimble with his feet. And with that, he had a 12-man team, someone who could play like an outfield player from the goalpost. It meant then that when Manchester City had possession of the ball, they play out from the rear because they had the competency to do that. And with that, they won the league. And they repeated it the year after. In 2015, Muhammadu Buhari, the Nigerian president, felt we were spending 1 trillion naira to import staple food. He didn't like the idea. He wanted to save foreign exchange, and he wanted to discourage the importation of staple, especially rice. So what did he do? He created the Anchor Borrower Program. Now, this is a problem in the first place because rice was the major staple of Nigerians. 200 million people, maybe an average of a plate of rice in 2 days. You are probably playing with about 90 to 100 million plates every day. He created the Anchor Borrower Program, which basically was speaking to subsidizing and supporting farmers. So he got in the Central Bank of Nigeria, the Bank of Agriculture, state government, and the National Agric Insurance Corporation. And you started to have states like Kebbi State, with producing 75,000 farmers, producing rice and selling to a state like Lagos, where you had 20 million people. 3 years down the line, statistics says that we are 90% self-sufficient in the production of rice, and that by the end of 2020, we will exit rice importation. And perhaps by the next year, we will start to export rice and earn foreign exchange. He saw the disruption, he created the proper process, and we're able to win with it. ASCS at the moment is working with a European firm where we're trying to create models for farmers that could take 1 million farmers out of poverty within the next 18 months. This is the approach. Tony Elumelu in the 90s, like a lot of his peers, wanted their own bank, but he did not want to grow organically. What did Tony do? Tony chose to buy distressed banks, challenge institutions. And so he went ahead and bought Crystal Bank. Now the problem with this is trust is the biggest commodity in the financial services industry. And so if you're dealing with a bank that is challenged, it will be a whole lot difficult to manage basic perceptions and issues against banks that were growing organically and did not have to deal with that. But Tony weathered the storm. A few years down the line, he bought another bank, Continental Trust Bank, fused it together, built a good franchise, and that franchise became the heart of the United Bank of Africa today. The rest of the story is you know. The chairman of the Nigerian Federal Reserve Bank, or what we call the Central Bank of Nigeria, Godwin Emefiele, and his team came up with an idea last year to say that we would insist, it was a policy, that deposit money banks in Nigeria should loan out 60 to 65% of their entire deposit. What that meant in layman terms is that for every 100 naira that a Nigerian bank mop up from depositors, he had to loan out 65 naira. That's a great idea. What did he want to do? He wanted to inspire growth. He wanted to put money into the productive sector of the economy. He wanted to expand the economy and grow the GDP. Great idea. What was the problem? Bad loans was the bane of the banking industry. And we're looking for ways to manage it as much as possible. So if you force banks to do this, that's a problem. And a lot of experts, IMF, they did raise an eyebrow. Personally, I raised an eyebrow too. But what did Emefiele do? Emefiele strengthened the credit bureau process. And he said, ab initio, for everybody that borrows from a bank, you will sign off that your deposits or investments in other institutions will be used to defray any default in the primary bank. So you started to have more responsible borrowers who will work hard to ensure that the loans work for them. That was the process that created the stability and took away the risk. That was in the unusual idea or the difficult idea. What did we get? Between July 2019 and October 2019, statistics said that the industry had grown its loan portfolio by 1.1 trillion naira. Now, what that means, obviously, is that a whole lot of money have gone into more productive sectors, jobs will come on, more productive activity, and clearly, you will start to expand the GDP. To move from a 2% position to double digits that you need, you've got to disrupt, you've got to create, and then it will allow you to lead. And ladies and gentlemen, we must produce. I've spoken with a couple of governors across the last 6-7 years, and I say you cannot spend 90% of your entire revenue on recurrent expenditure and expect to create growth. It won't happen. When Bola Tinubu became governor in Lagos in 1999, the size of the IGR was 500 million. Fast forward to 2018, it became 34 billion. If you must believe the words of the finance commissioner, adjust for inflation, that's $100 million in 2018 as against $5.5 million in 1999. Imagine what $100 million per month could have done for Lagos in 1999 if the Bola Tinubu IGR revolution had started a lot earlier. A lot of interesting activities are happening in the market at the moment. I'm aware today of a couple of banks with strong disruptive ideas coming on that will take out the bulk of the industry in another 2-3 years. We will disrupt, we will create, and then we lead. Thank you.